All right, welcome to another episode of The Property Prescription. My name's Philip Almeida, and today we've got a special guest, our national, what is your title, Saskia?
National Manager of Research.
Fantastic.
Yep.
And how long have you been with us, Saskia?
I've been with you guys 4 years, coming up on 5 years now.
And your background as well?
Well, I actually started off by doing a law degree, which is very much a different route that I didn't really see myself going down, to be honest. But I think a law degree is a very misunderstood degree because at the end of the day, it is research. It's just research and critical thinking. So
analytical.
Analytical, exactly. So very much applicable actually to what I'm doing now. But I started at the bottom as an acquisitions assistant and really got to know the business, got to know it from the ground up, and now I'm really stoked to be here helping with the research.
And this is your first podcast as well.
Yeah.
Yeah, so you're doing great. All right, so first of all, we're going to talk about negative gearing.
Yeah.
A lot of our doctors have come to us and budget night. When did you actually finish work?
Oh gosh, probably 3 a.m.
3 a.m.
Yeah. And endless calls all through the night. Everyone was obviously concerned. It's
And across our doctor clients, and surely they should be concerned around their portfolios, whether it's established, new, particular changes to sort of some of these negative gearing changes.
Yeah.
Now, let's dissect that. You've written, so you spent quite a considerable amount of time writing a white paper with David.
Yep.
Let's go through it, dissect
Sure.
it, go through winners, losers, and how we can actually approach it. So
Absolutely.
new property, what's going on there?
Well, new property is really, I suppose, the winner on the surface when it comes to this reform. But when you break it down, it's not really as scary for established property as I think it seemed on the surface. You know, we had these headlines, negative gearing scrapped, and that really seemed like a worst case scenario. And that's why everyone panicked. But when we really broke it down, that's not really the case at all.
And we saw what happened sort of during that 85 to 90, the Hawke-Keating era.
Yeah.
What happened to rents during that period?
Yeah.
And what happened to house price growth during that period?
The last time that there was this type of reform was 1985. Obviously, revoked in 1987, just 2 years
2 years later.
Yeah. From the period of 85 to 90, rents went up 45%.
45%.
45%
Unbelievable.
in the capital cities. I believe house prices, I have the numbers here, they went up 75% over that period.
You look at the white paper, unbelievable. So over that period, so we had strong price growth, we had strong rental growth, and what were the vacancy rates back in 85?
The vacancy rates were higher than they are now, I can tell you that.
I was sitting at 4%.
Yeah, Brisbane, 4.4% vacancy rate. And now we're sub 1.5%.
So what is it going to do to rents now? So what are we expecting in terms of some of our forecasting? We can read the white paper.
Well, as we know, past performance does not indicate future performance. But, I mean, if we're looking at those numbers, 45% rental growth when it was a much less tight market, the only assumption we can really make is that we're going to see more rental growth than that.
So what are we expecting in terms of, like we've put a number out there, it's pretty, in terms of rental growth, if you're negatively gearing an asset, it's going to be a non-issue within sort of 4 to 8 years. It might be neutrally geared or positively geared.
Yeah.
But what are we expecting in terms of rent growth? What did we have on there, 10 to 15?
Probably per annum.
Correct.
Yeah.
That is a big number. Established property. Okay. Budget night. We were very stressed. We weren't quite aware of what Jim Chalmers was going to say.
Yes.
Big sigh of relief.
Yeah.
So do you want to talk and dissect, obviously, changes to established property?
Yeah. So negative gearing is no longer available for established property, residential property, against your personal income each financial year. But that's not to say it's been completely scrapped. As soon as you've made a property gain, you can basically take that accrued loss and apply it to that gain. So over the long term, there's really no change to the benefit that you receive. The thing that really gets hurt is your serviceability and your cash flow in the short term.
It's really important. So you've just got the ability to just cash flow the investment. And if you manage your cash flow and it's actively managed in the right way, you have a balanced portfolio, you basically just get the benefit at the sale.
Yes, at a different time.
Yep.
So, Yeah, there's definitely no reason to panic about negative gearing, as long as, of course, you have to be meeting those risk mitigation frameworks that we have. And yeah, just considering all options with your advisor.
It's also the quality of the asset that you're buying as well.
Absolutely.
Really important. So
Yep.
you buy a quality established property, in one of the capital cities or a population centre of more than 100,000 people, you're going to get that rental growth.
Yes.
So the negative gearing sort of benefit, you may lose that in sort of 6 to 8 years. And we've found with a lot of our clients, a lot of our doctors, they end up becoming neutrally geared within sort of 5, 7 years. Not positively geared, but negative.
Well, the other thing is, if we're expecting this rental growth to come out of this situation, you're going to be hitting neutrally to positively geared much quicker than you have been recently, and you're already saying that it takes a few years to get to that position. So
you're absolutely spot on, and we'll talk about another episode, new versus established. But there are different types of new properties that you can buy that are quite dangerous, and there's going to be a big flight to new property as a result of these changes.
Yep.
And we have to be really careful when we're advising a doctor on what they should or shouldn't be doing with their portfolios.
Yes, because it isn't really black and white, this situation. It isn't new is the devil, stay with established, and it's not, new is now the only way to go. That's really not the case, and we can go more into the whys in a different episode, but yeah, just keeping an open mind.
And commercial property, a lot of our clients, a lot of our doctors are buying commercial property. We're buying their practices and their commercial investments. Any changes to commercial?
No, not for commercial property, not in terms of negative gearing at least. So it was very much a targeted reform towards resi property. But, that doesn't mean resi is now a bad investment. Yeah. It's a great investment.
And what do you think? Do you think some of the policies that the government have introduced in terms of making it more affordable for a first home buyer, what do you think about the policy?
Personally, I'm very pessimistic, to be honest. We really have a supply-demand imbalance in a lot of regions, and I just don't see how this will bring on enough supply to really tip those scales.
I think what they've tried to introduce, their intention, they were trying to do the right thing, but going through the policy, having a look at what happened during 85 to 90, looked at what happened to rents, look what happened to house prices, getting it repealed 2 years later, and the vacancy rates. And I think the other biggest thing that people aren't thinking about is the cost of construction.
Yes, absolutely.
What it actually costs you to build
a
2-bedroom apartment right now.
Yep. And well, in that vein of the first home buyer, so the first home buyer who's there trying to save their deposit, this scheme is going to make their rent go through the roof.
Absolutely.
And make it harder for them to save for a deposit. And by the way, the first home buyer, it's a very disadvantaged, I suppose, cohort, but they're not the most disadvantaged. The lifelong renter is the most disadvantaged, and they're going to just be further disadvantaged by this.
I really feel for tenants,
that
tenants that can't actually afford to go and buy an asset. They don't want to actually buy a home, or they actually can't afford it because they still need to work in the area that they want to work to.
Yep.
But given where they need to be located, they actually can't afford to buy something. So if their rent increases by 30 to 50% over the next 3 to 5 years, we actually, as a business, we actually feel for them.
Yes, absolutely.
Because we are actually, unfortunately, we're going to have to tell our landlords to increase their rents.
Yep.
But if you're a young first home buyer trying to get into the market, how are you going to save up for your deposit?
Yep. It's a huge issue with the policy that I don't believe was thought through. And I can't believe it wasn't, considering the historical precedents that we have.
Correct.
It's pretty mind-blowing to me.
Yeah, it's very concerning. We can talk about startups and business owners and people trying to start their business, but we won't get too political today.
No, absolutely not.
All right, so we'll end it there.
Yep.
And the next episode we'll talk about the capital gains tax changes. Thanks very much, and thanks for joining us,
Thanks
Saskia.
for having me.
Cheers.
Appreciate it.